Well, hello, traders and investors. My name is Roger Scott. Today is Friday. It's finally a Friday. Thank God it's Friday. It's been a long week. It's October 9th. Let's talk about global events. Let's talk about relative strength. I want to show you something different on the horizon, and then I'm going to show you a top low-risk stock for a Friday. Why not? It's Friday, right? All right. Let's talk about this. Global markets and Wall Street futures, they're a little higher after President Trump said talks had resumed on an aid package for struggling U.S. economy. That's very positive and something we really need right now. Indexes in Europe were largely higher midday, while trading in Shanghai and Sydney closed higher. Tokyo and Hong Kong declined. Stock prices have been volatile since mid-September. Election, folks, and election. As investors swing between optimism and possible development of a COVID vaccine, which is now being pushed back to first quarter of next year. That's not good. That changes the time clock. And unease as the market recovered too fast and shares are too expensive. Trump said in a TV interview, well, he says a lot of things, but hopefully he means it. Very productive talks have begun on more stimulus after supplemental unemployment benefits that supported consumer spending. The engine that drives U.S. economy expired. Remember, folks, 2/3 of our economy is retail sales and consumer spending. 2/3. So if we don't see it, it's bad. Really bad. U.S. government report yesterday showed 840,000 workers applied for unemployment. That's down slightly from 849,000, but the numbers remain high. And the bottom line is we've only gone from like 1 million to 800,000 in the last couple of months. So it's not like a swing that's coming right back. It's staying there. It's really staying there. This is really bad. Some investors are also seeing rising numbers for both Joe Biden and the upcoming presidential election as an indication more stimulus may be on the way regardless of what Trump says. If Democrats sweep the White House, Senate, and the House, representatives say a big rescue package becomes more likely. And that could offset higher taxes and tighter regulations that Democrat-controlled government could create. And I'm going to talk about that in a second. I'm going to talk about the election. I'm going to show you the best indicator that I've seen, and it's still confirming. And don't shoot me for being the messenger. I'm only pointing out what the stock market is telling us. You don't have to believe me. You don't have to listen to me. This is not a personal bias. I'm just pointing out what the market is showing us, and I'll show you right now some proof that Biden is leading according to the stock market. I'm not talking about any polls. I'm just talking about the stock market, and I'll show you why. To skepticism, stocks still look stocks still look expensive. Meanwhile, U.S.-China trade tension is simmering. Continued rise in virus cases in many countries remain a threat to the economy. France reported a record number of infections on Wednesday. This is really bad. Germany seeing a jump in new COVID cases and rising fears that the pandemic is gaining in a country that so far has coped better than any of its European neighbors. Britain is considering new controls amid measures. And crude oil is $40. We're right below, like 50 cents to $1 below the break-even level for frackers. Now, I want to show you something, and I've been talking about this for about 2 weeks now. Look at the Russell 2000. Look at this. It's up 1.82 yesterday. Again, let's look at the SPY. The SPY was up 0.89 yesterday. I'm going to show you again. The Russell was up 1.14 and the S&P was up 0.89. And now in the morning, the S&P is slated to open 0.42 up and the Russell is slated to open 0.85 up, twice as much. Also, let me show you. Look at this recent high. This is a 6-month chart. Notice highest high in the last 6 months. Almost the highest level in a year. Now look at the S&P. Oops, excuse me. I got a little overzealous with my mouse key. Look at that. We can't even get above the September 2nd high. All right. The September 2nd high was a high, but right now, since September 2nd, the Russell has been leading. Let me show you a closer look. And remember, trade war. Russell hates the trade war more than anything. And it's a lot more sensitive to the trade war than the S&P 500. What does that tell us? It's telling us, remember, if Biden wins, there's not going to be a trade war. The Russell's going to come up. So look at the S&P. It's right now clearing the 50-day moving average, 3 days, right? Look at the Russell. Again, I got to show you this because this is the biggest indicator I'm seeing. And not a lot of people are talking about this. Look, 1, 2, 3, 4, 5 days, 6 months high, highest. Look at the 2nd of September here. This was the 2nd of September. Look where we're at right now. 2nd of September. Look where we're at now. And look at the SPY. 2nd of September. It's like totally the opposite. Look. Look at that. Lower trend, right? Look at this. Completely the opposite. Completely. And the Russell, look at when the last time it made all-time highs. 1/16/2020. The SPY made all-time highs September 2nd, 9 months later. Russell was here, SPY was here. But since then, nothing, no soup. The election is heating up. We've had the we've had a lot of stuff come out. We've had the debate. The debate didn't really go great for either. But since Trump got infected and since the debate, according to the stock market, not the polls, the stock market, the small caps are leading. That's very, very positive for Biden. Also, alternate energy stocks have been leading. That's not good for Biden. So again, I'm just pointing this out. I could be wrong. The market could be wrong. Many things could be wrong with my analysis. It's not foolproof. But based on people putting their money in the stock market, the Russell is stronger than the S&P. And the Russell is scared of the trade war more than anything. So if you're a Biden fan, the Russell is your index. If you're a Trump fan, the S&P is your index. And the S&P, it hasn't been doing it. Now let me show you something else eye-opening. If you go to the S&P relative strength mode, and I've been telling you, folks, everything I'm telling you right now, there shouldn't be anything new here if you follow me on a daily basis. I want to show you something here. Look at the relative strength on the S&P. This is my S&P cumulative. Look at this. Remember, it was all tech, healthcare and tech. Look at this now. Retail, carriers, retail, home builders, construction and projects, basic equipment, home builders, power equipment, builders, development. Here we have NVIDIA, the first tech. Look at these. Advanced Micro and NVIDIA are the only two techs, and they're not anywhere in here. Now look at a month ago. Let's go back 1 month ago. We saw Apple, Advanced Micro, Salesforce, Amazon. Let's go back further. Let's go 3 months back. Look at this. NVIDIA, Regeneron, PayPal. See how it's all tech? This is all tech right here. All tech and healthcare. But if you look at now, where's the tech here? Do you see the tech? The first tech is NVIDIA, and NVIDIA is something else. You got NVIDIA and AMD, but again, if you go back 3 months ago or a month ago, look at this. All healthcare and tech. So things are definitely changing. The market is not rewarding tech the same way it did a few months back. So again, industrial, basic material, utilities, defensive stocks. If you look at my indexes, my cumulative strength, and again, nothing here should be new. I've been talking about this forever. Over the last month, consumer discretionary is leading, but look at basic material, industrial, material and industrial. That's where the money is. And if you look on a 1 month basis, utilities, industrial, then consumer discretion, then material. Look at technology all the way up here in healthcare. They're not leading anymore. These are the sectors that are leading. And consumer discretionary, you got retail sales in there, not the tech side of retail sales. So again, utilities, industrial, consumer, material, not healthcare, not technology. That's that's actually very positive because it's telling us that the market is becoming broader. So that's good overall. But again, I'm very concerned about the Russell versus the S&P right now. Now, I promised you guys I would give you a good trade for today because it's Friday. So here's my trade for today. Dick's Sporting Good, strong buy. Let's look at the chart. And it's showing an inside day setup. It's making all-time highs. It made all-time highs. and then it pulled back and has 2 inside days. So now I'm waiting for it to pull up again. If it trades above 63.10, 63.25, I'm buying. And if it falls below 58.59, I'm selling. 63.25 buy, 58.75 sell. And again, it's an inside day, which means volatility is lower because it's had 2 inside days after making a high, which is a good enough time for a market to pause before moving higher again. Folks, before I let you go, I've got something really big, something very important. Why? Because it's Friday. And why? Well, I've been dead on this market for months and months. What would you do if I said you could have doubled your money in just a matter of weeks? You still can, even with the volatility coming from the second wave. Oh yeah. Thanks to recent events, I'm certain that it's a possibility, a real strong possibility. When I looked at the NASDAQ and announced my last top pick, that trade could have made you 92.5% in 4 weeks or less if you listened to me. All right? Now, I've got plenty of others, and the exact same pattern that led me to these gains, it's lining up right now, and I mean right now. You don't want to miss it. 92.5% gains on the NASDAQ, completely hedged. Folks, it's the easiest money you will ever make. 92.5% in a month or less. You got to check this out now. Follow the link below. Learn how you can double your money before the end of this month. All right? Can you imagine that? We've got 21, 22 days left. Imagine making 92.5% or more before the end of this month. Follow the link below. Learn how to do it and get in on it now. Most importantly, have a great weekend. Bye, guys.